Welcome to XM.com for today's daily market comment by Mario Sotiriakos. I'm Christina Marujos. What started out as a relatively calm session evolved into a near apocalypse in the bond market, sending shockwaves across every other asset class. Investors are dumping government bonds at a stunning pace, which pushes up the yields on those bonds, in turn making stocks less attractive as the opportunity cost of holding them increases. The S&P 500 fell by almost 2.5%, while the NASDAQ suffered a 3.5% drop. Why have bonds suddenly become radioactive? In the short term, a disastrous 7-year U.S. bond auction yesterday likely left some primary dealers holding securities they didn't want, which they immediately dumped on the market, sending yields in the middle of the curve flying. In the bigger picture, it probably comes down to investors bringing forward the timeline of Fed rate hikes, despite what policymakers have been saying. On the plus side, there are reasons to be optimistic this episode won't spiral out of control. The first is the Fed itself. Simply put, the speed of the spike is threatening. It's one thing for yields to rise over several months, but it's another story when this repricing happens in just a few days. It threatens financial stability in a highly leveraged world. There might also be a self-correcting market mechanism at play. If bond yields continue to soar and stock markets are devastated as a result, there will come a point where investors are willing to buy bonds again just for their safety, pushing yields back down and calming markets overall. In other words, either central banks will step in soon or the market pain will become so excruciating that bonds will calm themselves down. However, it's crucial to note that for all the panic in the stock market, the NASDAQ is merely back to unchanged levels for the year, while the S&P 500 is still positive. The ripple effects were naturally felt in the FX arena as well. The dollar came back to life as risk aversion deepened, mostly to the detriment of commodity currencies and sterling, which have been trading like rocket ships lately. Gold has been another fatality of the yield rally. Rising real rates and a recovering dollar are a bane for bullion, which pays no interest to hold and is denominated in dollars. If the $1,760 support territory doesn't hold, the yellow metal could be in real trouble. This was today's daily market comment here at XM.com. Have a great weekend.